Thanks for clicking! Restarting overnight repo market operations is not a sign of trouble. This according to the Bank of Canada's Twitter page.
Maybe that's all we need to know.
Indeed, if you'll remember last week we discussed the Bank of Canada restarting overnight repos, that is, injecting cash into the repo market, into the banking system, when the overnight lending rate spikes higher than that which the Bank of Canada wants it to. And while the Bank of Canada insists on its Twitter page that there's nothing to see here, that this is a return to normal market operations, I have in the past found it prudent and valuable to never trust at face value something coming from the government.
What?
As such, I have been in contact with the Bank of Canada since making that video last week and have some more information on the overnight repo operations that the Bank of Canada has been doing since January 3rd. So what I want to do today is go over what's happened since the previous video, take a look at what the Bank of Canada had to say on its Twitter page, as that appears to be the only source of additional information the public is receiving about these repo operations.
Doing a heck of a job there, Brownie.
Discuss what is currently going on in the repo market, and then go over some implications for quantitative tightening. I'm guessing, hoping, that when the Bank of Canada makes its policy rate announcement next week and has its subsequent press conference, that someone in the media will take a break from asking about rate cuts and ask the bank about the overnight repo operations. We'll obviously have an update out on the bank's policy announcement and subsequent press conference on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these repos. On to the repos. First off, a very brief refresher. A repo stands for repurchase agreement, where banks trade cash and collateral with each other overnight, which helps banks that may have a lot of collateral on hand, like government bonds, but not a lot of cash. However, when the banks don't want to lend to one another at the Bank of Canada's preferred rate, the bank can indeed step in performing its own overnight repo operation, providing short-term loans to the bank seeking cash in exchange for collateral or government bonds. As mentioned in the previous video, starting on January 3rd, the Bank of Canada had engaged in over $30 billion worth of repo operations, that is, offering overnight loans to financial institutions to banks in exchange for collateral, when overnight interest rates rose above the Bank of Canada's preferred target. I had noted at the time that the media had failed to report on this seeming abrupt change in Bank of Canada operations, and as of this video, the media has kept up with that track record. But as we've seen in the past, there are much more important issues being covered by the mainstream media, by Bloomberg, than the Bank of Canada injecting cash into the overnight repo market for the first time since March of 2020.
I've done it when I was younger, and
Regardless, fast forward to this week, and the Bank of Canada has engaged in another $15 billion worth of overnight repo operations since the previous video. Now, I should note that although the Bank of Canada wouldn't disclose any of the details of these repo operations, as in who is taking these repos, who is the Bank of Canada lending money to, this $15 billion could be to the same financial institution over and over again. As in, the bank lends $5 billion, it gets paid back, the bank lends $5 billion, it gets paid back, etc. The Bank of Canada isn't clear on the details of these operations. And, absent any media scrutiny, the Bank of Canada has taken to Twitter to explain its operations.
Everything is fine.
Taking to Twitter to note that injecting money into the market is not a sign of trouble. If anything, restarting repos is a sign that the market operations are returning to how they used to be before the pandemic. Now, there is actually a lot to unpack in this relatively short Twitter post. First, injecting money is not a sign of trouble, and that, taken by itself, is indeed true. The central banks doing an overnight repo operation isn't anything out of the ordinary. It's one of the tools central banks use to manage interest rates. If the central bank wants interest rates to be 5% and RBC needs overnight money but TD will only lend at 5.5%, the Bank of Canada can step in and lend at 5%. By doing this, the Bank of Canada has just enforced its target rate. No problems there, nothing out of the ordinary. But what isn't normal is the Bank of Canada having to step in and do a repo operation since 2020, as the bank injected almost $400 billion during the pandemic, providing the system with ample liquidity floating around. No need to go to the central bank as a lender of last resort when there's money flooded throughout the system. And it's definitely not normal for the central bank to have to step into the repo market when the banks still have $120 billion sitting in their accounts at the Bank of Canada. So, the Bank of Canada hasn't had to do one of these repos, they haven't had to step into the market since back of March of 2020 when they injected almost $400 billion worth of liquidity. And let's briefly remember how that cash got there. It got there during quantitative easing, which the bank started during the pandemic, buying up bonds from the banks with printed money. So, on the one hand, yes, nothing out of the ordinary, the central bank entering into the repo market to enforce its target rate. It did this pre-COVID, not when there was $120 billion already in the system, but yes, it did this pre-COVID. On the other hand, this does represent a market shift, as the central bank has not had to enter into the repo market for the past 3 or 4 years, as there was ample reserves in the system. Yet, these reserves are drying up very quickly, moving much closer to the point where Deputy Governor of the Bank of Canada, Tony Gravel, said in March of 2023 was the optimal level of reserves it wanted to see in the accounts of the banks, between $20 and $60 billion. In fact, when Gravel made that speech in March of 2023, he noted that when those reserves got to the $20 to $60 billion mark, that's when quantitative tightening would have run its course, and the bank would start buying up assets again. Yet, we know that the Bank of Canada entered the repo market last week and entered it again this week. As I said during the previous video, something isn't as it should be. Further, when Gravel made that speech last year, he said that if we were to see persistent upward pressure on the overnight repo rates in the market before settlement balances reached our estimate of steady state level, it could very well mean our estimate for the range was too low. Let's put this all together. The banks have about $120 billion in their accounts at the central bank. But the bank is resuming repo operations, exchanging cash for government bonds. Gravel said last year that if the central bank had to resume repo operations before those settlement balances got to the $20 to $60 billion mark, which would be when the bank planned to end QT, then the bank's estimates would have been too low. Given that the central bank had estimated that bank reserves would have to fall to $20 to $60 billion before the bank had to enter the repo market, and reserves are sitting at $120 billion, and the bank is entering the repo market, this tells me that quantitative tightening could be ending sooner than we think, sooner than that which was anticipated. Further, let's remember what QT is. The Bank of Canada allowing the Government of Canada to pay back its bonds and the banks not replacing them. So the government gets the money from the market, the banks pays back the Bank of Canada, and that money that was in the market ceases to exist. Given that, over the next few months, the Government of Canada is set to borrow another $30 billion, we can imagine that even more of that $120 billion sitting on reserve at the bank is going to be used to buy up those bonds. So that's more money leaving the market, more money leaving the accounts of the banks, going to the Government of Canada, draining liquidity from the system. So, just to summarize, the Bank of Canada says that there's nothing to see here. This is all a part of normal market operations, a return to normal pre-COVID market operations. But the Bank of Canada undertaking repo operations when the banks still have $120 billion in cash sitting in accounts at the bank, $120 billion in the aggregate sitting in accounts at the Bank of Canada, tells me that something somewhere isn't as the Bank of Canada anticipated. This may be a return to normal pre-COVID operations, but pre-COVID, the banks didn't have $120 billion on hand at the bank. The bank, according to Deputy Governor Gravel, didn't think it was going to have to step into the market until those reserves dropped down to $20 to $60 billion. Yet the bank is stepping in, and those reserves are at 120, which, again, tells me, as we talked about last week, that someone very well could be low on cash. Some bank, some financial institution, some counterparty could be low on cash. Yes, there is $120 billion sitting in the accounts at the bank, but that could compose of one bank having $119 billion and one bank only having $1 billion, necessitating an injection from the Bank of Canada. The problem is, we just don't know. Those statistics aren't released.
That's none of your business.
What we do know is that the Bank of Canada is engaging in overnight repo operations for the first time since March of 2020. It's been doing it for 2 weeks, and it's doing overnight repo operations much sooner than it had anticipated. What we don't know is which banks, which institutions are requiring these repo injections, and if these injections mean that quantitative tightening could be coming to an end sooner than many had anticipated. And if quantitative tightening is coming to an end, while the federal government is still running a deficit, while the federal government is borrowing more money than it takes in, will this lead to more inflation? We will continue to track these repo operations and any news about them that happens to come out, as unlikely though that may be. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.